this video, we're going to explain exactly what a stock buyback is, 2 reasons why companies choose to do them, and if a company accepts a bailout from the government but did a share buyback, why you should be upset. Stay tuned. What's up, people? It's Nadia
and Nicole,
bringing you another installment of the Wealth Twin Show,
where we give you the best tips, tricks, and inside scoops to help you on your journey on the road to financial independence.
And what does that mean, Nicole?
It means we're trying to make work optional for you,
aka fire your boss. So if you're new here, make sure you hit the subscribe button. We make these videos on a weekly basis.
So today we're talking about stock buybacks. Now, as you know, 2020 has been a crazy year with the market going up and down and our economy basically crashing. Now, with that, the government has started a CARES Act and companies are asking to be bailed out. Why? Because a lot of these companies are saying they're going to go into bankruptcy because of the effects of coronavirus, the lockdown measures, the stay-at-place-at-home measures, things that are outside of their control. However, some of these companies, such as the airlines, are receiving a lot of flack for asking for bailouts because during good times, they were performing stock buybacks. So what are stock buybacks and why is that such a big deal?
All right, so let's talk about it. A stock buyback is when a company chooses to repurchase or buy back their shares that are in the stock market. Now, when a company does this, there are less outstanding shares in the stock market and the value will go up in the future.
Now, why would companies do this? Now, one reason is that they want to provide profits to their shareholders in a tax-favorable way. Usually, when companies get profits, they like to distribute it back to shareholders in the form of dividends. However, dividends are taxed at the income rate. When a company performs a stock buyback, that is considered long-term capital gains, which is actually taxed at a much lower rate than income tax rate.
Number 2, a second reason why companies choose to do buybacks, if we're going to be truthful, is because of executive greed, okay? Executives don't benefit at all when shareholders are paid dividends. So when a company issues a share buyback, that means the executives have made a move that allows the stock price to appreciate faster, and it helps the options of that company get closer to intrinsic value. It increases the intrinsic value of their stock options. Many executive compensation packages are made up of stock options, okay? If you want to learn more about stock options, check out this video up here.
Now, for those 2 reasons, we believe, and it's our opinion, that companies that had done stock buybacks in the past should not receive a bailout now with our government tax dollars. Why? Because the people that benefit the most from those stock buybacks, such as hedge funds, which are the large investors of these companies that push for stock buybacks, and also corporate executives who focused on greed rather than executing a vision that could actually help these companies in good times and bad times when they actually had that cash on hand, we don't believe they deserve the bailout.
Yeah. Sometimes just because you're a CEO doesn't mean you suck. Doesn't mean you don't suck, okay? If you are a horrible CEO and you're not running your company the right way, that company should fall. We're all responsible for our own financial planning. Like they always tell us, as individuals, we don't get a bailout. So why should these companies get a bailout?
If these companies go bankrupt, it would be a sign for others not to do stock buybacks because it won't be rewarded. Do what you are hired to do and do what's right for the company and its shareholders.
So if you agree with what we're saying, make sure you put no bailout in the comments below.
And also always remember that your manners will take you further than your money, and we'll see you in the next video.
See you in the next video.